Hello and welcome to Finance Bonanza. Thanks again for joining us. Today we will be talking about Luna. You're probably wondering what it is since you ended up on our video, so we are going to give you a beginner's guide to Luna. But before we begin, please show us support by liking this video and subscribing to our channel so we can continue to film informative videos like this. Now, let's get into the video. What is Terra blockchain, or Luna explained? Terra Luna is a decentralized finance, or DeFi, blockchain protocol supporting an ecosystem for users to mint, manage, and trade stable coins that can be tied to any sort of fiat. Additionally, the Terra protocol has expanded to offer support for stablecoin developers to build Terra DeFi projects. The project consists of two cryptocurrencies, Terra and Luna. Terra is a stablecoin standard pegged to fiat and other currencies. For example, Terra USD or UST is tied to the United States dollar, while Terra KRT is tied to the South Korean won. The native token, Terra or Luna, is the network's staking and governance asset. Users stake Luna to earn a place in governance and to become validators and obtain rewards. Users can also burn Luna to mint Terra's UST token or one tied to their local fiat. However, it's important to note that while these stablecoins are tied to the value of fiat, they are not backed up by fiat. Instead, the Luna token is considered an algorithmic stablecoin. An algorithmic stablecoin is an asset that derives value through a set of rules rather than being tied to an asset itself. This method enables Terra users to invest in the price of these linked without needing to hold their physical counterparts. To remain stable, Terra incentivizes its users to take advantage of arbitrage, the purchase and sale of the same asset in various marketplaces at the same time. Essentially, if UST is valued at $1.01 instead of $1, users can burn $1 worth of Luna to mint $1.01 worth of UST. Investors can sell UST for $1.01, earning a profit of $0.01 for their efforts. Ideally, users will keep this process going until the UST value decreases back to $1. Conversely, if UST's value is below $1, they can purchase the UST for $0.99 and burn 1 UST for $1 worth of Luna, earning $0.01 for every burn. Once again, users would keep this process going until UST returns to $1. Terra users can access this market swap feature via the official Terra Station wallet. The price information is pulled from off-chain oracles, so users always know the target stablecoin price. The users who manage this volatility on the Terra network are called validators. Validators are incentivized to manage volatility via transaction fees and the process called seigniorage. In terms of fees, validators are simply paid a small fee every time a transaction occurs on the Terra network. These fees vary based on the current volatility of UST and Luna. Seigniorage is a little more complex. Seigniorage is defined as the profit from creating a currency. For example, if it costs a government $0.10 to create $1, the resulting $0.90 profit is called seigniorage. Terra's case, whenever the network mints Terra or Luna, the minuscule profit from minting is distributed to validators and the network's treasury, hence the $0.01 arbitrage profit mentioned above. To sum it all up, when one mints Terra, an equivalent amount of Luna is burnt, and vice versa. Validators commit to this process in return for rewards, ensuring the network is safe from volatility and the algorithmic stablecoins can remain stable. So how does Terra work? Terra is a proof of stake or POS network powered by Cosmos and utilizes tender mint for consensus. POS networks require validators, or users who run full nodes with the complete history of a blockchain to process transactions. In doing so, validators are rewarded for each processed block of transactions via transaction fees. When a validator proposes a block of transactions, other validators must vote on it in a two-round process. If a block receives a positive majority vote, it commits to the blockchain and the validators earn for their efforts. The validator who proposed a block earns more. However, a validator must be chosen by the community via staking. Luna holders, also known as delegators, must choose a validator in which they'll stake their Luna. The more Luna staked towards a validator, the more they are valued by the community and the more often they can propose a block and earn rewards. Delegators also earn a cut of their validator's reward in return for their stake. Earning a cut of a validator's reward incentivizes delegators to consistently wet their validators to ensure a reliable consensus. That said, only top 130 validators are considered active within the network. If a validator's amount of staked Luna falls below the lowest staker in the top 130, they are deemed inactive. In fact, validators can fall into one of the three states within the Terra network: bonded, unbonding, and unbonded. Bonded Luna is staked to a validators and earning rewards and cannot be traded by the delegator. In contrast, unbonding Luna is a process, and its owners cannot earn rewards during this time. It takes 21 days for unbonding Luna to become unbonded, so the delegator can use it freely. Terra DeFi blockchain explained. Now, the primary purpose of Terra is for users to interact with decentralized applications or dApps without suffering from volatility or high gas fees like its competitor Ethereum. Generally, developers build a Terra dApp by requesting funding from the Terra treasury. Developers apply to the treasury by providing their dApp website, defining what their funding will go toward, describing in-depth governance, and detailing any potential dApp audit data. Terra's developers believe seigniorage will play a big part in the network's future. After all, if developers can earn a consistent stream of funding from seigniorage, they can offer cheaper services to customers, such as lower interest rates for a credit protocol or additional discounts on certain products. History of Terra blockchain. Terra was founded in 2018 by Do Kwon and Daniel Shin and launched its main net in 2019. Kwon and Shin built Terra to offer users the stability of fiat currencies while harnessing the power of blockchain technology for faster and cheaper settlements than traditional payment solutions. So is Luna a good investment? Luna is a growing powerhouse within the DeFi space. As of December 2021, Terra overtook the Binance Smart Chain to become the second largest DeFi protocol with more than 20 billion logged into the network across its applications. The value is likely to rise even more as Luna reached a market cap of $28.5 billion in January 2022. Alongside this news, the Terra network revealed a proposal detailing a plan to offer $139 million in UST to various DeFi projects on Ethereum, Solana, and Polygon. Should this proposal go through, the UST stablecoin will expand to networks it wasn't initially supported by, which would likely increase adoption and its value. So how to buy Terra or Luna? Those wondering where to buy Terra and its Luna token should understand that Luna is available on various exchanges, including but not limited to Binance, KuCoin, Bitfinex, Kraken, Gemini, OKX, and Huobi Global. Many of these exchanges feature Luna trading pairs with Tether, USD, Bitcoin, and Ether, alongside local fiat depending on the customer's country of residence. The future of Luna. The future of Luna is impossible to predict with complete accuracy, but current trends point towards bright times to come for the stablecoin project. Luna is home to some very popular DeFi projects, even if there aren't very many to speak of at the moment. Terra's overtaking of the Binance Smart Chain for the second most popular DeFi platform is nothing to ignore either. It appears that Luna's long-term funding plan can lead to even more successful projects built within its ecosystem, and it plans to expand to other popular blockchain networks can grow those projects even more. That was today's video. Thank you so much for watching, and I hope you enjoyed it. Please make sure to show us support by liking this video and subscribing to our channel. Comment down below what you think about this subject and if you ever invested in cryptocurrencies. That was it for today's video. I will see you